Good morning, everyone. This is Tom Vylord again from Wall Street Value. I just want to put together this quick video just to prove to you once again, and I'm sure you already know this, but Warren Buffett is a freaking genius. So he made a $12 billion paper profit today. So he did that through the use of warrants. So in our value investing course, we talk about options and buying call options, put options. Warrants are pretty similar. So when you're buying a call option, you can go long term, which are also known as leaps. The difference between a call option and a warrant is that the longest term expiration you have for a call option is 2 to 2.5 years. Now warrants are longer term. So you can buy warrants that expire 5 years from now, 7 years, 10 years, and there are also some warrants that are called perpetual warrants that have no expiration date. So let's talk about what Warren Buffett did in 2011. So the banks were still recovering from the subprime lending crisis of 2008. And the government made a lot of these big banks go through a stress test to make sure they would remain solvent in case we saw another situation like this. So Bank of America is one of the companies that was going through some problems. They haven't fully recovered yet. And Warren Buffett knew that. He saw that this company was trading at quite a big discount. But he also knew that it's probably going to be short-lived. Bank of America was a great company, but it was going through problems. And most value stocks do. That's why you're able to buy a great company at a great price. So Warren Buffett realized that Bank of America is worth a heck of a lot more than $7.14 a share. So instead of buying 700 million shares at that price, which is a pretty cheap price, but he didn't want to outlay all that cash. So he used leverage. And he just had to put a fraction of that out there to buy these warrants that would give him the right to buy 700 million shares of stock at some point in the future. So this morning, he realized now's a pretty good time to exercise these because they announced a 48-cent dividend a little while ago. So he exercised the right to convert the warrants into shares of stock. So he converted 700 million shares of stock, which he had the right to buy at $7.14, for $23 as of today's price, $23.84. So that's almost a $12 billion profit. All he had to do was be patient. He got the warrants when it was $7 a share. Mr. Market obviously was depressed on the stock. So Buffett had to wait for Mr. Market to properly price the shares. And that's what happened. So he made a $12 billion paper profit. So if there's a company out there that you're looking at, maybe you think it's any time between now and several years from now it's going to go up in value, you don't want to outlay the entire cash to buy those shares, maybe a warrant is an option to consider. So that's it for today. Thanks for watching, and I'll talk to you guys soon.